Bitcoin is a union in cyberspace. It's a monetary union. It's a more perfect monetary union. The sooner you join, the better you are off. And as people join, it gets more powerful, and and the price goes up. So if you're Tesla, you want to be first because Apple will pay twice as much. You're eventually going to need, you've got $20 billion worth of monetary energy today. It's losing 15% of its purchasing power a year. You're going to lose half of that energy in 36 months unless you protect it. If you put it into Bitcoin, instead of losing half your purchasing power, you can reasonably expect to double your purchasing power every year for the next 3 years. So why not put $1 billion in and it'll be worth $8 billion in 3 years instead of not put $1 billion. If you keep all the money, you're guaranteed to lose $10 billion in purchasing power. It's a guarantee.
For early companies, I keep thinking like it's like a FOMO thing. Like if Amazon says they're going to buy Bitcoin on their treasury, Bitcoin doubles. So if I actually put out a thing like 5 years ago called Apple and iCoin. It was when Bitcoin was like a 10 billion market cap. And I was like, if I was Apple, I'd start secretly buying up all Bitcoin and then announce that I was opening a Bitcoin bank, put up crypto wallets on every single iPhone. The price of Bitcoin immediately soars. You have like 5 million Bitcoin in your treasury that you accumulated. You can act as the de facto Fed of Bitcoin. Now that ship is totally sailed, but I still think the ship is not sailed where Amazon, Apple, or Tesla announce they're doing this. The price of Bitcoin triples instantly. So you already almost have a guaranteed, as kind of messed up as that is, locked in return once one of these.
Yeah. It's brilliant. And it's not messed up. It's very straightforward and obvious. If Tesla puts $1 billion into Bitcoin, they'll double their money within 12 months. If they put $2 billion in, they would probably generate a $10 billion gain, right? By the way, anybody could do it. Like if you're a billionaire hedge fund guy, you put $1 billion into Bitcoin, just put it out on the wire and say you did it, because Bitcoin it's a dominant network that's unstoppable. Everybody needs it. Nobody can stop it, but very few people understand it. 99% of the investors don't understand it, but once they understand it, they've all got to stampede into it, and they're going to squeeze through it, and they're going to bid the price up. And so it creates this very virtuous cycle. You buy it, the price goes up. It gets more valuable. More people want it. There's more adoption. The price goes up. Now more companies, maybe a company can't buy 5 billion worth of it. They can only buy 1 billion worth of it. When it goes up again, a big insurance company buys 2 billion instead of 100 million. And then it goes up again because Bitcoin only exists to do one thing, which is to provide monetary liquidity. So therefore, the higher the price goes, the better it gets, right? Which is the opposite of most companies, where the higher the price goes and the higher the stock goes, the riskier it gets. The higher Bitcoin's price goes, the less risky it gets.
Yeah, and it's like a self-fulfilling prophecy, because to me, any currency's value is essentially its utility. So the utility of Bitcoin goes up, the more people that accept it, the more brand value it has, the more big company treasuries that are buying it. Like there is almost a true material increase in the value intrinsically, at least by my definition, because the utility is there as increased,
Bitcoin is a union in cyberspace. It's a monetary union. It's a more perfect monetary union. The sooner you join, the better you are off. And as people join, it gets more powerful, and and the price goes up. So if you're Tesla, you want to be first because Apple will pay twice as much, and then Google will pay twice that much, and Facebook will pay twice that much. And eventually everybody's got to join, because if you don't join, you're going to lose 15% to 20% of your purchasing power. So ultimately, everybody's in this stampede to preserve their wealth or their purchasing power. And in this particular case, Bitcoin is the dominant answer. And as people start to realize that, it's just going to accelerate the transition and the adoption rate.
So I love this kind of like bull case we're doing here. And I want to tie it back to one concept, which is the fiduciary duty. Because to me, this is the key sort of like, if I was a sharp lawyer in this space, to start writing up these legal arguments of basically transcribing your kind of philosophy of what store of value is in the future, of when does the thought process of it's against your fiduciary duty to hold cash, or like, because to me, that's where, you know, shareholders and everything gets involved. It's like not even up to Tim Cook or Bezos anymore. It's like they have to do it almost. So is that kind of thing you see happening?
Yeah, it is. I mean, I think if you roll the clock back a year ago when the M2 monetary supply was expanding at 5%, everybody could kind of look the other way and say, well, losing 5% and I'm going to invest in 2% bonds and lose 5 and it's net negative 3%. And over 30 years, I'm going to lose all the cash, but I'm not going to hold it for 30 years. So they could kind of look the other way when it was a 5% M2 money expansion. But when the cost of capital went to 15%, when it tripled, now you can't look the other way because you're going to lose half the shareholders' purchasing power. Your cost of capital means if you're not getting more than that 15% yield every year, you're burning shareholder wealth. So what do? You either have to buy the stock back, or you have to invest in something which is beating that hurdle rate. Now, the problem with buying the stock back is you decapitalize the company and pretty soon there's no treasury left. It's like giving away all your money to charitable causes. You'll feel good about it, but if you actually lose your job, you'll starve and your family will starve. So a company can't decapitalize the entire treasury. And what's happened is the rampant money printing has made it more and more difficult to find liquid treasury assets that can be expected to yield faster than 15%. You know, you look them up, right? I mean,
there's like nothing.
Right. You better guess right on your equity, but big tech is a crowded trade. Gold is stalled out. Real estate is stalled out. Bitcoin is the best performing asset the past month, the past quarter, the past year, the past 2 years, the past 5 years, the past 10 years against everything. And why? Because you can't make any more of it. It's a very simple idea. What if I had something and you couldn't make any more of it and everybody wanted it? Well, then if you double the amount of money, the price is going to double at least. By the way, there are 3 drivers of Bitcoin. It's going to go up in value as the Fed and the EU central bank prints money. If they print 10% more money, you're going to get 10% more value because the supply is capped. It's going to go up in value as people stampede to adopt it. The consumers are stampeding to adopt it, and also as corporations stampede and as institutional investors. You got insurance companies, you got hedge funds, you got corporations, you got individuals on PayPal and Square. That's going to drive adoption. And the third reason it's going to go up in value is because technology is going to keep upgraded, and pretty soon it'll get built into Apple Pay and Google Pay and Alipay and Amazon and Square, and everybody is, you know, no one's going to program a new feature for gold ever, you know? It's not going to happen. What's the secret to Tesla again? The secret to Tesla is Elon Musk said, let's just take a clean sheet of paper and rethink the car, and let's see if we can re-engineer it better with software and do something different. He broke the mold. What if I said, I'm going to just re-engineer the idea of money, clean sheet of paper, and I'm going to program it to be better?